Hey, my name's James Nicholson and welcome to my YouTube channel. This video, we're going to talk about inflation. We've got new data coming out this week. Where do we expect it to go? What impact's that going to have on homeowners and property investors alike? Before we jump into that, I want to thank everyone that watches the channel. We're having some great growth on the channel. Last week, we had some really big views. Nearly 40,000 people watched in a week, which is absolutely insane. But a lot of people that watch aren't subscribed. So if that's you, can you help me get to 10,000 subscribers by smashing that subscribe button and hitting the bell notification? And we want to get more eyeballs on the channel. So how can we do that? By smashing the like button. Go on, do it right now. Smash that like button because that tells the YouTube gods to get more people to watch. So please help me with that. So inflation, it's been going on for years now, hasn't it? A couple of years at least. I remember when I was doing big refurbishments in the pandemic, and that's when people started talking about inflation. I remember one of the hardest things that we really struggled at that time to get hold of was plaster. And so plaster is normally not a problem. There's loads of it around. But during the pandemic, some of the factories were shut, and so people weren't producing it. People were selling £10 bags on eBay for £100. I don't know if they actually sold it, but I could imagine that some people would, because you don't need hundreds of bags of this stuff. So if you wanted to get a room plastered out, you might just pay it. And during that time, there was lots of talk about timber costs going up, and then that's when it started becoming in the mainstream. Now, inflation, we peaked at over 11%, which was crazy. And we're still sticking at 6.8%, which isn't good. Now, Michael Gove has been doing the rounds and getting interviewed over the last few weeks. And he's indicated that inflation is likely to go up. So the August data, which is what we're going to get this week, is likely to go up. Now, we're at 6.8% at the moment. Bit messy, the board there. I don't know if you can see that, but it's really dirty there. And the bad news is that we're expected this week, hopefully this is wrong, but this is what the expectations are, is that we're going to go back up to 7.1%. So what does that mean for us? What will happen? What will be the consequences of that? Well, the Bank of England's meeting is a couple of days later, or the next day actually. So I think inflation data is Wednesday, Bank of England is Thursday. I think that's the right dates. Maybe I'm wrong, tell me in the comments. But what this means is that it's highly probable that the Bank of England will increase the base rate. So we're currently at 5.25%. Very likely that we'll go up 0.25% to 5.5. Now, I don't think it's going to have that much impact on the inflation, if I'm totally honest, because the inflation is rising this month due to oil prices and energy costs, right? So they're going back up again. And so what is it going to do putting the interest rates up? It means your credit card's going to get more expensive. It means it's going to try and stop you spending money. So people look to reduce prices, but you can't control the oil cost, can you? I can't control the oil cost. And so it seems fruitless to me, but the Bank of England want to be seen to do something. Now, UK inflation is really stubborn, and other countries have got it dealt with. Spain's a great example. If you want to have a Google search and see what Spain did, they got their inflation dealt with pretty quickly. They capped VAT on certain things. They made the energy companies not profiteer off the crisis and dealt with it quite well. America is less beholden to things happening in the world. They can grow a lot of stuff in their country. They've got their own energy there as well. And so they've got their inflation down to 3%, but we're at this high level. So this means that interest rates are going to go up. Now, are the banks going to pass that on to us? Because that's the interesting thing to see. And I don't think that they necessarily will this time. I could be totally wrong. I'd love to know your thoughts on that. Do you think the banks are actually going to pass these on to us? Because recently they've been cutting interest rates. They are below base rate. We had a look on Money Supermarket the other day. There are actually rates at less than 5% when the base rate is at 5.25, which is interesting to see. So I'm not sure how much impact this will have, but the bank need to be doing something, and that's what they've got. They've got the only thing in their toolbox is really that. So when does inflation benefit us? Because this is a property channel, right? So this will mean that prices are effectively getting cheaper for houses again. And so inflation is our saviour. We actually, as investors, if you owe money, the buying power, let's just say that you owe 100 grand. Now today, that 100 grand can go and buy 100 grand worth of goods. But next year, if inflation sticks at 7%, then in real world terms, that debt that you owe is only worth around £93,000. It's been eroded with inflation, and that's a good thing. And so we call that a silent property crash. So we've got prices coming down in real terms. So house prices have gone, let's just say, from 100k, they've not gone down much, have they, at the moment? They will go down more, but the house in real world terms is 98k. But if you factor in inflation, then that house, the value of that house is getting eroded. People's wages are going up slightly higher than inflation at the moment. Not everybody's, of course. But this is kind of, if you are an investor or a homeowner, you would rather your house get devalued by inflation rather than real world cash. So if I've got a 100 grand house, I'd rather inflation was killing that 100 grand. And so what I could buy with that 100 grand was less in the future than an actual crash where the house went from 100 grand to 80 in real world terms. I hope this makes sense. Do comment below if you've got any questions on it or if it does make sense to you. And so this will impact the house price declines. So maybe house prices go down in real cash value 10% in the next year. Who knows? It could be 20, it could be 30. But also coupled with that, the inflation is still around. It's still going to hit that 7% for a while. That's also making your house value down. And if you owe a mortgage or you have debt on credit cards and stuff like that, I'm not advocating credit card debt for sure, but any debt that you do have is kind of getting eroded as well. So this is kind of helpful. So what do you think is going to happen this week? I'd love to know your thoughts and comments. I think that, yeah, from what I'm reading in a lot of sources, they kind of leak it out anyway. They want to get the stock markets prepared, right? And so it's looking like we're going to creep up to 7.1%. That, I feel, is definitely going to mean that interest rates are 99% sure that they're going to rise again on Thursday. Let me know your thoughts. Do you think interest rates will go up 0.25% this week, 0.5% this week, or less, or not at all? What do you genuinely think is going to happen with the Bank of England meeting this week? And also, let's have a discussion about, do we think lenders are going to keep the rates at where they are, even if the base rate goes up? I'd love to know your thoughts and comments on this. I do reply to every comment on the channel. So do check out all the other content on my channel. I've got more than 500 videos now. And why don't you go and check out this video right here.